The decision to keep rates unchanged means indebted consumers will continue to pay the same for their loan repayments. The Reserve Bank expects inflation to rise in the coming months and to peak at about 4%. Average inflation for this year is forecasted at 3.4% and 3.6% in the next year. It has adjusted the inflation forecast to incorporate a nearly 8% increase in electricity prices, a consequence of a recent pricing correction by NERSA.
The MPC decided to keep the policy rate unchanged at 7%. 4 members preferred to keep rates on hold, while 2 favored a cut of 25 basis points. Since September last year, we have reduced rates by 125 basis points, and we want to see how this is affecting the economy, how expectations evolve, and how inflation risks are resolved.
Experts say this is possibly not the end of the road for rate cuts, and more cuts may follow later should inflation be contained at the bottom end of the target bracket.
Inflation is quite benign, but the Reserve Bank increased its inflation forecasts from the previous meeting's projections. Inflation is still above the 3% level preferred by the Reserve Bank, and inflation expectations also exceed the 3% now preferred by the SARB. This is therefore not necessarily the end of the cutting cycle, but rather a pause, with the Reserve Bank's own models also implying that the bank could cut interest rates further if the inflation forecasts materialize.
FNB senior economist Koketso Mano says the rate cuts may resume only next year.
There's expectations that inflation will lift in the second half, so that will complicate any thoughts or anticipation that you will get to see the resumption of the cutting cycle very soon. This is on top of what the Monetary Policy Committee is trying to do, which is to guide inflation expectations lower. So that will likely keep them on hold. We think that they will have enough data to be comfortable to resume the cutting cycle maybe in the second half of next year. But I have to say that the risks to our outlook, which we admit, are probably to the downside, right? Or let me put it this way, there is a likelihood that you could see those cuts coming through earlier than what we anticipate. In fact, the rest of the market sees the resumption coming through in the first quarter of next year.
Economic growth expectations have been revised upwards, with the local economy forecasted to grow at 1.2% for this year, up from an earlier forecast of 0.9%, however noting a weaker export outlook given the higher tariffs. Gloria Sefako, SABC News, Johannesburg.